Hello, everyone, and thank you for joining us for the MSU FCU Financial Education Seminar Series this evening. Really glad that you could all join us for our last webinar of 2025. So thank you for attending these throughout the year. We really appreciate and you all and hope that you have, left this year with some good takeaways about your own financial journey. Um, so tonight we are going to be talking about financial management for you. And on our agenda tonight, we'll kind of start by talking about banks and credit unions and how they're similar and different. And then we'll move into account features, online and mobile banking tools, and ways to protect yourself as well. And then from there, we'll shift into budgeting, saving, setting goals in a way that actually fits your life. And by the end, you should have a clear picture of how all these pieces kind of work together. But before we get started, just want to share a quick disclaimer. All the topics that we covered today are for educational, purposes and meant to provide general guidance. They're not really considered personalized financial advice, as everyone's situation is very different. So what works for one person, might not be the best fit for another. So I always encourage y'all to ask questions and do additional research for, what really is going to work for your own situations. And definitely feel free to reach out to us if you have any other questions. Okay, so let's start with a quick comparison of credit unions and banks. So at a high level, they offer many of the same products and services, which is why they can feel kind of interchangeable sometimes day to day. But there are some important differences that can impact fees and rates and just the overall experience that you have with your financial institution. So similarities here. So both banks and credit unions offer things like checkings and savings accounts, credit cards, mortgages, auto loans, personal loans, all of those types of products. With both banks and credit unions, your deposits are insured up to $250,000. And most of the time you have access to branches, ATMs, debit cards, online banking tools, all those things. So from a functionality standpoint, the everyday banking needs are covered either way with a bank or a credit union. So, what makes credit unions a little bit different and kind of unique, right? So, credit unions are insured by the National Credit Union Administration, or NCUA, that you'll see those placards at the teller line every time you visit a branch. But this insurance protects deposits up to $250,000 per member, just like the FDIC insurance does for banks. So, from a safety standpoint, money is protected. Credit unions are not-for-profit institutions. So that means that they're not focused on generating profits for shareholders. Instead, their earnings are reinvested back into the credit union to benefit all of their own members. So one important distinction is that when you bank at a credit union, you are a member and part owner. So members have a voice, and the institution is designed to serve the people who actually use it. So because of this structure, credit unions usually do offer those lower account fees, lower interest rates on loans, while also paying higher dividends on savings when possible. Credit unions are also often community based, so they tend to focus on serving specific communities, workplaces, or groups, which allows them to better understand the local needs of their community. And many credit unions also participate in the shared branching and ATM networks, right? So anytime you see that co-op symbol anywhere, you can use that ATM, usually without a fee. Um, and so, as you can see here, while banks and credit unions often offer similar services, the way they're kind of structured and who they're designed to serve can create a very different experience. All right, so now we've talked about credit unions and how they're kind of structured. So let's take a look at banks so you can kind of clearly, see the difference here between the two. So banks still, once again, insured by the FDIC up to $250,000 per depositor. So again, from that safety standpoint, your money is definitely protected. Banks are for-profit companies, right? So their primary goal is to generate profit for shareholders, which is different from that member-owned model of a credit union. So when you bank at a traditional bank, you are considered a customer, right? Ownership is limited to that small group of shareholders rather than the actual account holders themselves. So because of this structure, banks typically do have those higher account fees and higher interest rates on loans, but this can vary by institution and account type. So banks are generally also not going to offer those shared branching or shared ATMs with other institutions. So usually when you're using that out-of-network ATM, if you do have a bank, then you're probably going to, get assessed those additional fees and things like that that you wouldn't experience at a credit union. So that can be, one big difference if you travel a lot, if you're away from your home branch, things like that. So as you can see here, the difference in structure and scale can really affect the different costs that you might see, access that you might have to branches, and just the overall, customer experience. All right, so some common fees here. Many of these fees that we're going to talk about, people experience them often, but they can actually be avoided with, raising that awareness and practicing those good financial habits. So things like overdraft fees, minimum balance fees, out-of-network ATM fees, those can really add up quickly. Right. So understanding how your account works can really help you keep more of your money in the long run. Now, overdraft protection. This is something that comes up a lot that people ask about because they're, like here at MSUFCU, if you remember with us, we have overdraft protection, which is free, right? But then we also have courtesy pay. So let's just kind of talk about those two different things. So, overdraft protection is a service that can help prevent transactions from being declined if there aren't enough funds in your checking account, right? So typically, when you have overdraft protection set up, it pulls money from whatever account you link to it for overdraft protection, and it pulls it in set increments. So here at the credit union, we pull in $100 increments. So if you just go over by, $13 or something, that transaction will still be approved, but it's going to pull 100 from your savings account or from your line of credit, whatever you've set up as that overdraft protection. So it's meant to be kind of a safety net, right? Not something that you want to use all the time, especially if it's connected to a credit card, because I know you're going to incur those cash advance fees. So definitely not a long-term solution. If you are kind of having some issues with money or falling behind, or have, a hardship that's causing you to, lose income, things like that. So just really understanding how it works is really important and those costs that could be associated. So here at the credit union, there is no service or a service fee for using overdraft protection. That is free. So it transfers that money automatically. There's no fees. But if there are no funds available in any of those, pathways that you linked for overdraft protection, then the financial institution, MSUFC, might cover that transaction and charge a fee. So that's called courtesy pay. So that's the difference between what you'll see as overdraft protection and courtesy pay here at the credit union. Um, so this is a opt-in service with courtesy pay, so you can decide to, opt out of it so that you won't get any of those fees that could be associated with it. But in that case, if there is no overdraft protection set up or any, funds in those accounts, then that transaction would be declined. So, that can run into trouble if you're trying to get gas or, in an emergency situation. So definitely something to consider, but just kind of wanted to go over the differences of the two because that is a question that we get a lot here when talking to people in the community. All right, so let's move on to online and mobile banking. So this really, these tools are here to help make managing your finances a lot easier. Right, so you can check balances, pay bills. That's one that we'll touch on a little bit more. Send money, apply for loans, transfer funds. You can obviously view all your transactions, set up different alerts and notifications that would come through that might help you monitor things a little bit closer, and checking your credit score. So using those tools regularly really can help you to stay organized and to spot issues that might arise earlier than some. So obviously all these are free with here at the credit union. And the bill pay is a great one that I use all the time. I had a situation years ago where, I had set up a ACH payment with one of my credit cards, and somehow that got hacked and my account number, was saved with that merchant, right? And because of that, a lot of problems arose, and I lost money and things like that. So from that point on, I started using bill pay because with bill pay, I'm never giving my account number and routing number to the merchant to pay that bill, right? I'm just pushing the money out. So that money just gets sent from the credit union directly to that merchant, but not directly from my account. So the merchant isn't pulling the money out, we're pushing it to them. So for that reason, they don't have access to my account number and it keeps all that a little more secure. So that's one reason that I use our free bill pay. And I really do like it for a lot of reasons, but definitely a cool service that we offer here. Also, one more last thing here. It's kind of a security tip. Definitely don't use the same username and password across multiple accounts. I know that's something we talk about with a lot of our, fraud protection and prevention seminars. So, that can, mean if one account gets compromised and you use that same login for, multiple accounts, then that hacker or that scammer is going to be able to get into other accounts that you own. So definitely use strong, unique passwords, and set up those alerts, right? So you can see when there's things happening on your account that you might not know about. Okay, so beneficiaries. These is something that a lot of people forget to review on a regular basis. But by naming beneficiaries, you're really choosing who receives your assets, and then those designations actually also will override what's in a will, what's in a simple will. So it really is important to keep those beneficiaries up to date. Even just checking it once a year or, just to make sure everything is the way that you intended, is really going to help, simplify the process for your loved ones, down the road when that arises. All right, and then contactless payment. So really hope that everyone's using this now. It usually is available with, when you're checking out at most places these days, but really is a huge security feature, more so than, swiping your card or putting the chip in there, right? So when you tap your card, your actual card number isn't shared with that merchant. So that makes it a lot more secure than swiping it. It's also very fast and convenient, right? When you're just having to tap your card or when you're using your mobile wallet. So this is another thing that I do just because if I don't want to carry my purse or my credit cards, I can use my, MSUFCU signature Visa or debit card from my mobile wallet to pay. And that really is adds, those other multiple layers of security, including, different authentication that it goes through. And then obviously, usually it scans your face if you're using like Apple Pay. That's what I use. But yes, so there's those multiple levels of security there as well. And most, usually you can use these at most merchants. I mean, sometimes they might not accept it, but usually anyone that accepts the tap to pay, you can also use a mobile wallet in those situations. Okay, so up to this point, we've talked a lot about the tools that we use to manage our money and our accounts, different technology and access and things like that. So I want to shift gears now, and talk about how all of those tools actually kind of come together in real life. And that's through budgeting. So for a lot of people, the word budget kind of brings up those feelings of maybe restriction or stress or even failure if you've tried to budget in the past and it just didn't work for you. So before we kind of talk the numbers and different specifics, I want to reset the way that we think about budgeting. So I love this quote here. Budgeting isn't about telling yourself what you can't have. It's about telling yourself what you can have. Right. So I just love this quote. Kind of really reframes the word budgeting in your mind. So it's not a punishment, right? It's not about taking things away from yourself. At its core, a budget is simply a plan for your money, right? It's telling your money where to go instead of wondering where it all went at the end of the month, right? So when you have that plan, you can really spend money confidently without guilt, right? Because you already decided ahead of time what you can and can't afford. You've already set that money aside for, those impulse buys, or you've already set that money aside to go on that vacation, right? So instead of in those situations asking, can I really afford this? In that moment, budgeting kind of has already taken the front seat and lets you know that answer, right? So I just kind of like that, just kind of reframe that mindset around budgeting. So first part of budgeting, really important to ask yourself why you're budgeting, right? So your why is the reason that you'll stick with when that motivation fades a little bit. Maybe it's, having that peace of mind. Maybe it's sleeping better at night, right? Maybe it's paying off debt or taking a vacation, finally buying that home that you've always wanted for your family, or just building up that emergency fund, right? So you're more prepared in those situations. Don't have to dig into that, you know, that line of credit that you're trying to pay down. So the why doesn't have to be dramatic or anything. It just has to kind of matter to you, right? So really take a moment and kind of think about what you want your money to do for you, not just what you want your money to pay for in your life, right? So just kind of a little homework activity for you to kind of think about there. And really, budgeting isn't just for people who don't have enough money, right? It's for anyone who wants to make sure that their money is going to be enough. So people at every income level um, are going to benefit from budgeting because it's not about how much you make, right? It's about how intentionally you're using your money. So let's break down budgeting into some simple pieces here. So income first is everything coming in, on a regular basis, money wise. So that could be paychecks, different, benefits. Maybe you have a side job, just anything else that's kind of consistently coming to you. And then we have our fixed expenses. So those are bills that are mostly the same each month, right? Like our mortgage, our rent, insurance, car payments, subscriptions, right? We all have those nowadays. So then we will, subtract that. And then our variable expenses change from month to month. So maybe groceries, how much gas we're using, dining out and entertainment and things like that. Um, so those would be our variable expenses. So we take income minus those two expenses, and that is where we have our budget. So that's that magic number that we come up with. So this is where people usually feel the most pressure, but it's also where the most flexibility lives once you can take control of it, right? Okay. Oops, there we go. All right. So no perfect format for budgeting, right? There's a lot of different options or ways you can do it, kind of depending on your personality, what's going to work for you. So some people love apps. That's kind of the kind of person I am, right? If it's easily accessible on my phone, I can enter it in real time while I'm out, buying my groceries. I know what that total is. I can just put it in the app. So there's a lot of budgeting apps that can be really helpful these days. Some people, if you're more, engineer minded, you like those spreadsheets or math or that type of thing, then maybe a spreadsheet will work for you. You can set that up on your own, right? And then some people still prefer to use, the good old pen and paper and actually have it, write it on the sheet and have it right in front of them to look at. So really the best budget is the one that, you're actually going to look at, that you're actually going to attend to on a monthly basis or, quarterly and update it and things like that. So if it feels too complicated from the start, then it's not going to last, right? So simple and consistent is always going to pay off in the end. So this is where personalization really matters. Your budget should really reflect like your goals that you have for yourself, right? Your habits, your real life, not some ideal version of yourself that you might picture, right? Really think about it as what you're doing day to day and how you're living and what's going to work for you, right? So if you know you like convenience, build that in. If flexibility is important to you, then plan for that, right? So the budget should work with you and not against you in the end. All right, so setting our future selves up for success. So we've talked about kind of that budgeting, kind of as a mindset, right, and a tool. But the next step is turning that plan into action. So budgeting does help us understand where our money is going, right? But saving is also how you start building that security blanket, right? And actually opening up those options for the future. So this slide is all about those simple, realistic ways to kind of set future you up for success without needing some big income change or the perfect budget that you're always sticking to 100%, right? So at the center of this slide is the idea of paying yourself first. So this is something that we always teach in a lot of our different presentations that we do. But what that means is treating savings like a non-negotiable bill, right? So this is something like that's built into our budget, like a fixed expense, right? Just like our rent or utilities. So instead of saving whatever might be left at the end of the month, you flip the script and you save that first, right? So even those small amounts, even if you have to start small, even if it's only $10 out of each paycheck, just do it. That consistency is really what matters more than the amount that you're saving. So I want to walk through kind of a couple simple habits, that kind of support this idea. So right there at the top, make savings a bill, right? So when it's built into your actual routine and habits, it kind of stops feeling like an option with whatever that leftover money is, like we said, right? So you don't have to decide every month whether to save. It's just going to happen. It's just part of the process when you get paid, right? And then commit with automatic transfers, right? So that automation kind of removes the emotion from it. Every other Friday when your paycheck hits, that automatic transfer happens, kind of out of sight, out of mind, right? If you have to do it manually every time you get paid, you might think about it a little more. You'd be like, well, I kind of want to spend that money on going out to eat this weekend instead of putting it in my savings. So even just that little 5 seconds you have to think about it could set you back a little bit. So setting up those automatic transfers can really be a big help, especially when you're kind of first starting out with budgeting. Direct deposit to your savings, right? So sometimes with your employer, you can set up to automatically go right from the employer to a savings account. So that's another option that also kind of, is a little bit easier than even creating that automatic transfer once it hits your account, right? If it goes straight from your employer to it, it's really out of sight, out of mind, right? You're not even thinking about it. I know a lot of people that have separate, whole bank account numbers set up so that they're not tempted to dip into that money. And if that's where you have to start, that's totally fine, right? I definitely did that for many years before this became more of a lifestyle for me, right? And then cut back on spending. Well, obviously we all know that one, right? So it doesn't mean cutting out everything that you enjoy, but it means being intentional with your spending, right? And those small adjustments can really free up a lot more money that hopefully you'll want to put in savings for your future. Shopping smart, right? So looking for deals, comparing prices, maybe, letting that online Amazon cart or whatever it may be sit overnight before you're pressing buy. A lot of times just that time and reflection will help you to not spend as much in the long run. And then save the unexpected money that might come in, right? Things like little bonuses from work, tax refunds, if someone, gifts you some money. Those are all really great opportunities to boost your savings without impacting your normal budget, right? So all of these habits kind of work together to make savings feel a lot more manageable, not as overwhelming. And then like one tool that we always like to talk about, which doesn't have to be exactly like this. You can kind of alter it to where it's going to work for you, but the 52-week challenge. So this is kind of a very simple way to build up a savings habit over this first year, right? So how it works each week, you save the dollar amount that corresponds with that week of the year. So week one, you save $1, week two, you save $2, and so on, and continue increasing that by $1 each week. So by the end of the year, you've saved $1,378. So that's a pretty good little emergency fund to have built up by the end of the year, right? So like I said, it doesn't have to be perfectly followed to this rule, but you can reverse it. Some people would rather pay the $52 deposit at the beginning of the year instead of right at the end when, the holidays are falling and usually people are gift giving and things like that. They'd rather be down to the $1 a week saved by that time. So reverse it if that works for you, right? Or split it up, if you want to save around $1,400, split that up across the 52 weeks and see, what that comes out to and just save that every single week. Keep it more consistent, right? So the point isn't the exact structure that you're going to go by, but it's really about building that habit of saving consistently over time. All right, so now that we've talked about why savings really matter, um, let's talk about kind of, where that money should actually go. So not all savings accounts are the same. So we're going to kind of go through the different types that you might have offered to you with your banking account. Um, and the really big difference between all these is kind of accessibility of the money and how much it's actually going to earn over time, those dividends. So this slide kind of breaks down the most common types of savings accounts, and when each one might make sense, for your situation. So from we'll kind of walk through from left to right, with it's kind of starting with the most flexible option and kind of moving into those more structured accounts. So there's no best account overall, really, but it kind of depends on your goal and how soon you're going to need to access that money. So let's start with the standard savings account. So these are definitely usually the most flexible, but because of that flexibility, they do tend to have lower dividends, right? So you're not earning as much money out of having your funds in that account. But that trade-off there is the accessibility. So the funds in here are liquid, meaning that you can get to your money easily when you need it. So you can usually have multiple standard savings accounts and add money to them as regularly as you'd like. Many don't require a minimum balance, which makes them a great option for like an emergency fund, right? Or maybe a short-term goal. Maybe you're just trying to save, for a new laptop or to go on a weekend vacation away or something like that. So that might be a good, option in those situations. Then we have the high yield savings. So these accounts work similarly to the standard, but they typically earn a little bit higher dividends. So these are usually considered semi-liquid. Your money is still accessible, but there may be more rules around, transfers or minimum balance requirements to actually earn those dividends. So these might be a good option for goals where you want growth, but still a little bit of flexibility, maybe a little bit longer term goal. Because if you do, take money out of this account, then you might not earn, the dividends that month. That's those minimum balance requirements there. And then we'll move on to certificates. So um, at the credit union, we call these certificates. Some other institutions call them CDs, but these are definitely the ones that are more structured, right? So you're going to get the highest dividends available here with these accounts, but the trade-off is that accessibility. So these accounts are not liquid at all. So your money is committed for a certain, period of time. You typically cannot add money once the certificate is opened, but you'll see that little asterisk there. We'll talk about that in a moment. One option that the credit union offers that's a little different than that. And with certificates, there's always a minimum balance requirement, right? So you usually open it with a minimum of, $500 or whatever it may be. And you can't add any money to that, right? So you could start it with as low as 500, as much as whatever your institution allows you, but usually you're not able to add money to that. So these work better for those longer term savings goals where you're not going to need this money for a set amount of years or something like that. If you're saving up for a down payment on a house and that's 5 years away or 10 years away, a certificate might be a better option because you're going to get those higher dividends. So, like I talked about, that little asterisk there on cannot add money. So, we always like to talk about the 1 year add-on certificate. So, if you are a member, this will be available to you here at the credit union. But it's a really cool product, very unique to the credit union. But you can open these with as low as $50, and then you can make deposits to them. So that's a very unique thing for a certificate. Usually, like I said, you cannot add additional money, but with this one, you can. You can add up to $10,000 per calendar year. So having that, option of starting it with only $50 is really awesome. I know a lot of people will use these for their children's accounts to kind of grow that savings over time. But it's really a great, when I was first building my, emergency savings, this was the option that I chose. I started it with 50, so I knew I still had my, other like emergency fund in case I got a flat tire or in case some emergency arose. But then I was trying to build that bigger emergency fund by using this certificate. So pretty cool option. If you haven't heard about it, we just kind of wanted to, make you aware that that is an option here if you're a member at the credit union. So key takeaways with all of these, they kind of offer that different level of commitment with each one, and how easily you can actually access that money and how much it earns in the end. So really, you want to match that account type to what goals you have for yourself, kind of what savings work with you instead, having your savings work for you instead of against you, right? And then at the bottom there, we'll see kind of, all of these accounts are federally insured. kind of giving that peace of mind. Commitment determines how locked in your money is. Those dividends reflect the potential growth of the money that you have in that account. And accessibility kind of affects how quickly you can actually use those funds. And security, all in all, ensures that your savings are going to be protected there. All right, so we've talked about the different savings strategies and different types of savings accounts. So that next piece is making sure that your savings goals are actually, realistic and achievable here. So this is where a lot of people get stuck. It's not that, their goal is bad, it's that the plan isn't clear enough for them, right? So this is just kind of a good way a good template when you are making goals to kind of think about these different aspects. Having these SMART goals can really help turn like a vague idea, like, maybe, okay, I want to save more money. That's very vague, right? Um, by kind of, you know, applying each of these to that idea that you have, it can make it a goal that you can actually follow through on, right? So let's start with the S in SMART. So specific. So this means being clear about what you're saving for. So not just a vacation, but what kind of vacation do you want to go on? Not just a down payment, but how much I need for this down payment, right? So the more specific you are, the easier it's going to be to stay motivated. Then you want it to be measurable. So measurable means that you can track your progress along the way. So you know exactly how much you need and how much you've saved so far. And this is where things like that monthly savings target or those automatic transfers are really going to help. And then you want it to be attainable. So attainable is about checking in with yourself. Like, does this goal actually fit in, to my current income and expenses? If not, do I need to adjust that amount or the timeline to reach that goal, or do I need to adjust both, right? So you want to make sure it's attainable. If it's not, then you're a lot more apt to give up and lose that motivation for it, right? And then you want it to be realistic. So this asks the question whether this goal kind of works alongside the rest of my life, right? Savings shouldn't force you to overextend yourself or rely on credit to get by, right? So you want it to be realistic. Are you going to overextend yourself by trying to reach this goal in this time? And then finally, it's time based. So every goal needs a deadline, right? That's what's going to keep you motivated to reach that goal. So that timeline, really gives your savings purpose and kind of helps you work backward from that to create the plan around how you're going to get there. So when those goals are really specific and realistic and time based, they fit more naturally into your budget, right? When you've actually compared it to all these things, and you're no longer guessing, right? Or kind of like hoping that you'll have money left over. You have that clear plan that tells your money exactly what it's going to do, right? So a good savings goal should always challenge you, but it should also, support your life in the long run and not compete with what you're trying to do in life. And then there's just a breakdown of some examples of the SMART goal, right? So we put our money needed, our deadline, start date, end date, how many months that gives us to save, and then just break that down, So break down that $5,000 over 20 months. That means that we have to save $250 a month. And then actually create that plan around it. So ways that I'm going to reach this goal. So that's just a couple examples there. All right, so we've covered a lot today. We talked about managing our accounts, budgeting, saving, setting those goals. So before we wrap up, I want to leave you with a few reminders here that I think are just as important as those numbers and strategies and all those details. So these are the things I encourage people to kind of come back to when finances start to feel a little overwhelming. And none of these are about doing things perfectly, but they're about giving yourself permission to make progress in a way that really works for you. So it's okay to ask for help, right? Involve others. Um, the financial topics that we that we bring up in conversation, they can really feel very personal or uncomfortable when we're talking about them with other people, but it is good to remember you don't have to figure it all out on your own. And a lot of other people are going through the same things you are on your financial journey, or they have in the past, and they might have answers for you, right? So, whether that's like reaching out to someone like us or a trusted friend, or, just even just asking a little question of a friend, can really help them lend that support that's going to make a big difference in your life. And it also helps with accountability, right? Um, and encouragement along the way. So if you have, if you're budgeting with a partner, or if, you and your friend kind of challenge each other to set up a budget and stick through it. And then you actually talk about it, on a weekly basis or monthly basis, and hold each other accountable. That can be really important. I definitely need to be held accountable in a lot of the things that goals that I'm trying to reach. If I don't have that accountability piece, then I'm most likely not going to be able to get there, right? Um, so definitely, these money decisions that we make, if you do, you might live alone, and that's, fine if you're the only one in control. But, a lot of people do have a partner, a spouse, children in the mix, right? So it really kind of is going to affect the whole dynamic, right? So really offering that support and getting that support, asking for that support from family can really be important. Also, it's never too late to start. So, no matter where you're at today, starting now is better than waiting, right? So, progress doesn't require that perfect past. It just requires me starting now and looking at that next step. And saving is a habit, right? So we talked about, really setting up those automatic transfers, treating saving like an expense, paying yourself first, right? Very important. So those small, consistent actions really do add up. And the amount, like I said earlier, the amount matters far less than the consistency that you're putting in with these habits. And time really is one of your biggest assets here. So the earlier you start, especially with saving, the more flexibility and options you're going to have in the future, right? And also, I know in other sessions we've talked about compound interest, right? So the earlier you start, definitely very important when trying to build up that savings. But even starting later, is still, you can create that momentum. So what matters most is using your time intentionally once you decide to start. All right. Well, thank you all for joining me tonight. We just have a couple other resources here that I wanted to share. And these are open. You don't have to be a member to access any of these. But the Funtivity Zone, this was a platform that was started during 2020, but has really grown a ton lately. There is a ton of like interactive games and videos and things like that for children as young as, pre-K, all the way up through high school. So you can find that on our website, or just, Google Funtivity Zone, MSUFCU, or you can scan that QR code to bring you to that platform. But really suggest, the importance of talking to the youth in your life about finances from a young age, and really getting them set up for success as far as that goes. So thank you all for joining us. I do want to say, check out our events page. We have our events for, January, February, March will be posted soon. So check out those. We have a lot of really cool things coming in the new year. As including in-person lunch and learn that we'll be holding towards the end of January, where it will be a catered event at our headquarters. So if you haven't seen our headquarters since it's been renovated, I invite you all to come to that. The registration will open probably in the next week or so. So keep checking the website for that, or I'm sure you'll get that email if you're a member. We'll let you know when that registration is open, but we'd love to all see you in the new year there. As you close out tonight, you'll also have a short survey that will pop up just to get your feedback on tonight's session and on my presenting skills. So definitely take that. We love to get your feedback, and also any ideas for future presentations that you'd like us, us to have for you. So once again, thank you all for joining us, and I hope you all have a great evening, and we will see you into the new year. Bye-bye.